Hey guys, what is going on? Welcome back to the portfolio. As always, hope you guys had a fantastic day of trading today. And again, I want to thank you guys for all the support on the channel, all the viewers, all the subscribers out there. Immensely appreciate the support on the channel. If you guys do like the content, if you guys do like the video series, feel free to like, share, and subscribe. And if you are a subscriber, make sure to hit that bell button to get alerts and updates on all new content posted on the channel. Today I want to talk about one of my favorite buy and hold stocks, a stock that I've had in my Vanguard account for quite some time. This comes in response to a number of viewers on the channel, new viewers, new subscribers on the channel, wondering what my favorite buy and hold stocks are. So I thought I'd kind of go through in detail the stock you see up on screen here, VOO. This is a Vanguard S&P 500 ETF. I've had this in my Vanguard account for a number of years, and I've been really doing a buy and hold type of investing strategy. I've simply been putting money into the stock. Haven't been really worrying about what the price of the stock is. I've been contributing money in a dollar cost averaging type of fashion. Basically, you put money in on a fixed interval, a fixed amount, and you don't worry about what's happening in the stock market or in the stock price itself. So whether the stock is going up or down, you simply put in your fixed amount on the fixed interval, whether that's per week, per month, whatever that may be. And over time, you're going to be averaging out the peaks and valleys of the stock price and have a very good rate of return. That's what dollar cost averaging is all about. I put out quite a few videos talking about dollar cost averaging, as well as a little bit more sophisticated method of doing that, value cost averaging. But the key is putting in money on a consistent basis over a long period of time. And at the end of that period of time, you'll have a very good return on investment. You can see this stock over the past 5 years, 108.38%, which is phenomenal. Over the last 1 year, 20.02%. I would caution you that this is not to be expected for every year. We are in a historic bull run, one of the largest increases in the S&P 500, as well as one of the largest increases with regards to longevity, the number of years. I think currently it's now surpassed the other bull markets, and this is the longest bull market in history. So you're not always going to be getting 20% per year, or even over the last 5 years here, averaging more than 20%. You're more likely going to average around 8 or 9% if historic trends hold true. Again, you can't really predict the future based on past performance. There's really no correlation there, but you're not going to be getting 20% per year. So just to kind of keep that in mind, an 8 or 9% return on money per year would be phenomenal. It may be a little bit better than that as well, but the key thing I want to kind of stress is that you need to have a quality investment like VOO or another index fund. And I'll kind of go into why I like index funds. But this is one of the best funds, I believe. This is what I have in my portfolio. Again, I'm not suggesting anybody buy this stock based on my advice, but this is simply what I'm doing with my portfolio. And this is a stock that I like for a buy and hold stock. You can see in the statistics here, this stock has a very good dividend yield, 1.859% for a large ETF, and the market cap, $82.65 billion. This stock, it really isn't detailed here, but is investing in essentially the largest companies in the United States. I think it's around 500 of the largest U.S. companies. And the goal is really to track the underlying index, which is the S&P 500, which is considered one of the best gauges of the overall U.S. stock market with regards to rate of return. So it has a very high potential for investment growth. The share value will rise and fall based on what the current market is doing. But over time, you are looking at a very good performance if you believe the stock market as a whole will rise. So this is most appropriate for basically your long-term investor, long-term goals, where money's growth is really essential. So the dividend yield is not that great, 1.859%. The growth over the time span in which you're putting your money in will be hopefully tremendous. So it's a little bit higher risk type of investment, but with higher risk comes more reward. If you want to be extremely safe, you put your money into bonds where there's essentially a guaranteed rate of return, but you're not going to be getting the type of performance you would with a stock like this. 20% over the past year, 108.38% over the past 5 years. And the other reason I like this stock as opposed to other ETFs or mutual funds is because of the expense ratio. The expense ratio for this particular fund is only 0.04%, which is phenomenal. If you guys have watched my other videos, I've talked about SPHD quite a bit. Another great stock index ETF I like because it is a lower price for investors who don't have humongous portfolios. It's only $40 stock. It also has a monthly dividend, which is very good for new investors who are investing to kind of see that dividend roll in rather than having to wait every 3 months like this stock here. And the dividend yield is a little bit higher as well, 4 to 4.5% typically on that stock. But the expense ratio is very high, 0.3%. So if you compare that stock to this stock, 0.3 to 0.04, you can see that there's a stark difference between the expense ratios, which doesn't seem like a lot. But if you figure you're going to be holding this stock for 20, 30, maybe even 40 years, that will add up, especially if you start having very high portfolio values. Your portfolio value is, $300,000, $500,000, $1 million, $2 million. You can see how those expense ratios will definitely put a ding into your overall return. Again, it's not a big percentage, but over a long period of time, it can add up to be quite substantial amounts with regards to total dollars that you'll be losing in fees. And there's really no need to do that. You can basically put your money into this stock, 0.04%, or the other stock, and they essentially have the same rate of return, more or less. The only difference is that the other stock will have a higher dividend yield, and it pays out a monthly dividend for some compounding interest, which this stock does not do. But this stock is geared for growth over the longer term. And the companies that this stock is investing in are some of the best companies in the United States. So these companies are companies like Microsoft, for example, Apple, I think some of the other companies as well. Let's see if I can actually pull that up here and take a look. So the top company is Apple, Microsoft, Alphabet, which is the parent company of Google, Amazon, Facebook, Johnson & Johnson, Berkshire Hathaway Incorporated, JP Morgan Chase & Company, ExxonMobil, and Bank of America. So there are some very good growth stocks there, especially the top 5 there. Apple, Microsoft, Alphabet, again, Google, parent company, Amazon, and Facebook. Some of the best growth companies that you can buy. So it's a little bit higher risk, but definitely a lot of reward could be had because all those companies are companies that are large, established. They're not fledgling companies, but they still have a lot of room for growth, especially if you're thinking about a Facebook, an Amazon, a Google, an Apple. Very, very good stocks for the longer term. So that's why this stock is up 108 and 20% over the last 5 and 1 years, respectively. A great stock to kind of jump into. So that's what I like for the longer term. VOO or similar stock like VOO, there's a lot of these stocks from a number of different companies. I simply have a Vanguard account, so that's why I put my money into this particular stock. But there's essentially a number of different companies that have similar stocks with the same kind of portfolio balance with regards to the underlying companies: Apple, Microsoft, Alphabet, Amazon, Facebook, so on and so forth. So this is my buy and hold stock. Again, in my Vanguard account, VOO. I like this stock personally. It's got great companies, great growth companies, a little bit higher risk, but very good performance so far, and a lot of potential performance over the longer term. And the expense ratio is very, very low, and it's a very large fund as well, which I think perform a little bit better than some of the smaller funds that have the tendency to kind of try to turn over their stocks to kind of beat the bigger guys in the market, which I don't like. It incurs fees, and it's just much more volatile. A stock like this, low expense ratio, index fund, you're simply kind of doing a passive investment management scheme, going off an index fund rather than a manager trying to actively trade. And because of that, it has very good performance over the longer term, and it's very, very stable. So that's why I like this stock. Please take a look at this stock if you're interested. Again, I'm not recommending anybody buy this stock. This is simply what I'm doing in my portfolio for a buy and hold strategy. So yeah, I just wanted to kind of detail this for you guys. Let me know what you guys think about this stock. Let me know if you think there's a better stock out there for a buy and hold strategy, an indexed fund strategy with keeping in mind low fees and good growth performance over the longer term. If you have a better one, please let me know. Be really interested to hear that. So not to make the video too long, I'll kind of end it here. As always, if you guys enjoy my videos, feel free to like, share, and subscribe. And until the next video, we'll see you then.